Welcome back to the Money Garden. So today it's Monday. Welcome back to Money Monday, and today we are going to cover the step number 4 in the 6 steps to financial independence. So before we get started, let me review it for you guys, those of you that are just joining us. In this series of 6 courses or 6 videos, if you will, I'm covering for you guys the 6 steps to financial independence. And the 6 steps to financial independence or financial security, if you will, are number 1 is cash flow. Number 2 is debt management. Number 3 is an emergency fund. Number 4 is proper protection. Number 5 is building wealth. And number 6 is preserving your wealth. So today we are covering step number 4 out of the 6, which is proper protection. So high level, very high level, I will just touch on a few points that are important to remember when we think about this step. We get insurance for a home, a house, right? If you're renting, maybe a renter's insurance, right? We get insurance for car insurance. We get insurance for our cell phones, right? Some of us get insurance for jewelry. You name it, we get insurance for all kinds of things. Yet, very rarely, like majority, more than 2/3 of Americans do not have life insurance. And I know it sounds staggering, but it's true. And the 1/3 that actually does have something, majority of them don't know what they have, don't understand their policy, don't know when it expires, don't know what the fine print is, and more importantly, do not know that they have options to not only increase their coverage, but also decrease their premium. So here are some things I'd like to talk about when it comes to life insurance. So number 1 today, I'm going to cover with you guys a little bit about the different types of life insurance, right? And then number 2, we have a method that it's utilized, or we highly recommend to utilize to understand how much life insurance should we get, because that's the other biggest problem when people get there. Well, I don't know, should I have $1 million, 500,000, 200? I don't know. Well, there is a guideline, there is a method that we can use that can help us. Again, this is not a be-all end-all method. It doesn't mean you have to have that kind of coverage, but it certainly can give you a guideline or a baseline of where you might want to get started. So the types of life insurance. There are 2 major types of life insurance. One is term, which means, just like the word implies, it's term, meaning it has either 10 years, 20 years, or 30 years. And at one point in the future, it expires. And then the other type of life insurance is permanent. So within the term, there's pros and cons to both. So over here, I'm going to make a small little asterisk for you guys, and I'm going to say something like, it depends. There are a lot of people out there who are very good in the world of finance, but sometimes there are some flaws in their recommendations, because I personally believe there is no one size fits all. So for example, like the Dave Ramsey's of the world, some of you follow him, or Susie Orman, obviously, clearly they have proven it. They are fantastic minds. No one argues with that. But for example, his principle is buy term, invest the rest. But now, Dave Ramsey has been around, what, 30 years, maybe 20 years? But by now, I see it over and over. I meet clients that tell me, oh, 20 years ago, I listened to Dave Ramsey. The problem with that is that most people will buy the term because it's cheaper, but they don't invest the rest. And that's the problem. And 30 years go by, and they don't have, now their 20-year or 30-year policy expires. Good luck getting life insurance when you're 55 or 60 or 65, especially if you have some illnesses or health issues, right? And then number 2, not only you're going to end up without any money because you didn't invest the rest, but more importantly, you're going to end up with any coverage. And so that it's not necessarily the best advice for all Americans, because we have to understand also human behavior. So when I work with my clients, I don't necessarily recommend one or the other. I always want to understand what is your situation, what might be best for you, and because we always focus on doing what the right thing for the client is. So that's term, and the permanent is just that. It's life for life, pretty much. Now there are different types. There's whole life, there's universal life, and there is the latest one that's something we call index universal life, which in my opinion, it's really the best of both worlds, because not only it allows you to have lifetime insurance, but it allows you to have a investment account with it, and it's safe. So it has a lot of benefits to it. But for right now, I'm just going to stop there in terms of the types of the insurance that we have. It is term and it is permanent or term, right? Neither one is better than the other. It's just whatever might be best for your situation. And I would just invite you guys to consider when you're thinking about getting life insurance, make sure you ask a lot of questions from your advisor and make sure that you provide a lot of your about your particular situation or what might be best for you. Now, the second point I wanted to cover is a method. We call it the DIME method. DIME, D-I-M-E. Now, DIME stands for, so these are the following 4 areas or factors that we recommend to be considered in when we try to calculate insurability. D stands for debt. If you have any debt, then you would write it down. Let's say you have $10,000 in debt, you write it down, $10,000. Then I stands for income. So for example, if you are looking at your spouse, if your spouse were to pass away, right? So then the question that their income will be gone at this point, right? So the life insurance supposed to cover their income at least for 10 years, especially if you have little children. You definitely want to consider that, because if the spouse passes away, whichever spouse, right, then the other spouse, you want to make sure that you provide that extra income so the spouse can be at home and take care of the children and raise them, right? M stands for mortgage. So again, so if your income is $50,000 a year times 10, which is the recommended, in this case that would be $500,000, right? So we have the debt, which is $10,000. The income, $50,000 a year times 10, it's $500,000, right? So now we're looking at $560,000. And mortgage, let's say if you have a mortgage, right? If something happened to you, you want to make sure your spouse is able to stay in the house, right? That they're not going to lose the house because he or she is not going to be able to make the mortgage payment. So let's say that's another $100,000, right? So now we're looking at $760,000. And the final is E, stands for education. If you have children, well, you don't have to, but do you intend for them to go to college? Then you want to calculate in how many kids you have and approximately how much you think they're going to need for college per year. So when you add it all up, that's going to give you your baseline, your guideline of, okay, how much insurance should I be getting for my life insurance if I consider life insurance for myself and my family, right? So just to summarize it for you guys, it is extremely important. Life insurance is really a very integral part of a very solid financial plan, because unfortunately people die all the time, accidents happen all the time, and if one of the spouses, something happens, especially if you have a family, you want to make sure that you leave something behind, you leave a legacy. Also, it gives you the chance to completely break the cycle. Like, let's say if you come from a long line of poverty, this is your chance that after you have gone, you leave something to your children and you completely change the trajectory of their life. So types of life insurance: term and permanent. And then how do we figure it out? We use the DIME method. DIME stands for D, stands for debt, I stands for income, M stands for mortgage, and E stands for education. So I hope I brought you guys value today. I hope that helped. Of course, if you have any questions at all, as always, I'm so happy to hear from you guys. Please like, comment, share, send me your questions. I'm always happy to answer them. And with that said, thank you so much for joining us today, and I'll see you guys next time.